It's a well-known fact that institutional traders move the markets and retail traders usually follow them. But how do you know if an order actually came from an institution? And how do you know if the order is big enough to move the market? In today's video, I am going to show you how order flow charts reveal the footprints of big players, and more importantly, how can you take advantage of these orders. Once you learn to spot them, you will never look at the trades the same way again. Here we'll use two powerful order flow methods to understand which side the big players are likely driving the market. So the first one is weightage method and the second one is imbalance method. A regular price action chart can't tell you who placed the orders, but on an order flow chart, the difference becomes very crystal clear. If you are new to order flow charts, let me give you what exactly is order flow chart. In this order flow chart, the candles look similar to the price action chart. The only difference is that whatever the numbers which you are looking on left and right side of this candle, they are actually real orders that are getting executed in the live markets. So whatever the left side orders you are seeing, these are the orders that are getting executed at the best bids, and the right side orders are nothing but the orders that are getting executed on the ask side of a limit order book. So now let's go into the two methods which we had discussed. First is the weightage method. So in this method, what we do, we basically look at the weight of a candle. So for example, take this. So in this, we divide the candle into two halves. So exactly at the half point, this white point, we call it as the half back of the candle. And if you look at the downside of this half back, we have more orders compared to the upper half back. So this indicates the most of the orders are executed at the lower levels, indicating bias at this point of time. It is bearish. Now let's look at again the next 15 minutes. So here too, the similar story. You have more orders, more lots that are getting executed on the lower side of the half back, indicating again most of the sellers are presenting themselves at the lower levels. So here if you look at, there has been a significant shift from the lower side to the upper side. So look at this 11:45 candle. What happened? More amount of orders are there at the lower half back, but at the same time, how the price is closing is also more important. So orders are on the lower side, but the prices is closing above these big orders. So this indicated the market orders couldn't able to push the prices downside. Next candle also, sellers tried to push the prices to further lows, but then the prices have closed clearly above the previous candle high. And look at this, guys. So slowly the weightage itself of the big orders has been shifting to the upper half of the candle, here in this candle, here in this candle. So basically my point of showing you this is two things you need to remember when you are looking at the weightage. One thing is where the weightage is, where the prices are closing, and you try to interpolate these two things. Now the next method which we are going to discuss is the imbalance method. Imbalance is nothing but we look at the ratio of buyer and seller. What we do here is, if you look at here, all the way in the left side there are orange boxes. So this is an indication of a strong imbalance on the left side, means market sellers are very aggressive compared to the market buyers. Basically these imbalances indicate mostly institutional traders. So how do you look at this? Is simple. You always look at these imbalances diagonally. Like if I have to point out here, 594 sellers against 14 buyers, you have 198 sellers against 0 buyers, 356 sellers against 21 buyers. So you look always diagonally from left down, one step down to one step further on the right side. Now when a price closes below this imbalance, it basically says these market sellers are very successful in pushing the prices downside. So here too that same happened. There are two imbalances, prices closer below it. At the same time you have more amount of weightage on the downside with the concept which we have discussed. There is a negative delta. All these things further solidified the idea bias itself is downside. But later somewhere around this point, you look at the imbalances which were very aggressive on here first and second 30 minutes, it slowly disappeared. The sellers disappeared the imbalance has disappeared, indicating maybe the momentum is losing. But despite of imbalance at 11:45 candle on seller side, the price has closed above the big volumes. So somewhere around 1 o'clock, what happened, prices have closed above the buying side imbalance. So this clearly indicated the sentiment has shifted from the sellers to the buyers. And then we have again one more imbalance on the right side, price has closed above the imbalance. So for sellers sentiment, you look on the left side imbalance. For buyers sentiment, you look on the right side imbalance. Now one more point you need to remember with this imbalance is, higher the imbalance, more reliable it will become. At the same time, you also need to remember, more number of imbalances are stacked against each other, it says there is a strong dumping of orders at that point. In those scenarios, you need to watch for the range of the candle, so that plays a important role. So despite of, let's say you have 200 points of strong range in 15 minutes, you have strong imbalances on left side indicating sellers are strong, you have good amount of weightage on the downside of the half of the candle. Despite of all that, the range is 200 points on an average. Nifty moves by 170 180 points these days. So all the move that was supposed to happen, it has happened in the first 15 minutes. The probability of further prices going down, it reduces exponentially. If you like this video, this is just the beginning. Our upcoming video will push your trading skill to the next level. Make sure you watch that too. Until our next video, thank you guys, have a nice day.